Welcome, everybody. This is Wells Mateer, your favorite Forex trainer. I want to do a quick training today. I want to continue with where I left off last week. I did share some information last week that I wanted to continue. Last week, we talked about market structure. And if this is your first time joining my Forex Bootcamp training, welcome. If you're watching it on my YouTube channel, go ahead and subscribe to the page and hit the notification bell. That way you get notification when I do videos like this. But last week's video, we talked about market structure. This week, we're going to talk about break obstruction, BOS. And I'm going to show you exactly what that looks like on the charts. And then I'm going to ask you guys to also study with me. I didn't cover some things on the charts that I want you guys to focus on and pay attention to. What you're looking at right now on the screen is gold. XAU USD is a symbol. And of course, I'm on TradingView. If you're not on TradingView, you can go ahead and go to my website and sign up for TradingView. It's absolutely no cost. You're going to need this platform to chart your charts and take a look to see what the candles are doing, because everything you see here are candles. Green is candles are trending upward. Red is candles trending downward. So, of course, they like to say it's a battle between the bulls and the bears, right? The bulls are always charging forward. The bears are pretty much going down. Um, so let's start the training. Let's get right into it. And let's take a look to see exactly what's going on in the charts. This is gold. So we're going to analyze gold. I'm going to share some things with you in this particular chart. Some of you guys already know I do a top-down analysis. I normally start from the weekly, the daily, and then the 4 hour, 1 hour. And I look for entries on the 15-minute and also the 5-minute. But when looking at the chart, what we want to look for is I want to talk about BOS. This is break of structure. So let me show you what that looks like. All right, so when looking at this particular chart, if you pull out your trend line, we're at the 4 hour right now. If you pull out your trend line and you go from the bottom to the top, you have a trend, right? This would be an upward trend because the market's making higher highs, higher lows, higher highs, higher lows. Okay, higher highs because this high is bigger than this high over here. So whenever you see that, that's considered an upward trend, right? Now, when you want to set also your supply and demand zones, right? Supply and demand, usually on the bottom and the top. So the first candle you see that breaks out of the low, this red candle right here, and then you see two consecutive green candles right here. So you want to mark this out by boxing it up, right? So you're going to box the red candle and pull it forward like that. And you want to pay attention to what's going on the left side as well, because we're coming from a downtrend into an uptrend, right? So you could mark that out if you like with your trend line. See, this would be considered a downtrend right here. And then when you see a break in structure, I'll mark that out for you guys. You can see that. The horizontal ray. When you see this structure, right? When the structure is broken, which is right here, you're going to have a trend structure break, right? So the trend is changing from a downtrend into an uptrend. But the break of structure happened right here. This green candle is higher than this candle over here on the left side. Okay. So that's called the change in character and change of structure as well. And how you mark out the breaks of structure. See, whenever you have an upward momentum movement, Okay, you go to the higher high, which is right here, right? Which is right here actually before it starts to dip into the red right here. Once it dips, you have a retracement. You have a retracement here. Okay. And what you do is you mark that with this info line. And you stop there and you pull all the way across. And to make it straight, you just hit the shift key and release it. All right. And we're going to colorize that and make it, let's say, this color where you guys can see it. And you make it a little thicker for you guys, gals. Okay. All right. So you can mark that and call it break of structure, BOS. So text, I already have saved the text. Oh, structure. Okay. And whenever you see a higher high, just clone it and say, okay, this is another break of structure. Okay, because this particular candle broke this particular structure. So break of structure. So whenever you have breaks of structure, you want to mark it out. And you stretch this all the way out because this candle on the far right is bigger than this candle right here. So that's a break of structure. Okay. So train your eye whenever you're marking your chart, train your eye to set these pivot points. Okay, and call them break of structure. So again, clone this. We say this here's another higher high, right? This high is higher than this high. So we have another break of structure right there. And then we have another break of structure on the next candle. Keep cloning it until it exhausts itself on the top of the trend. So here's another one right there. Okay. So every one of these breaks of structure, right, has a pullback associated with them. Okay. So rule of thumb when trading the market, you always enter, right, the market on a pullback because you want to buy low, right? Buy at the lowest point of the pullback, buy low, sell high, buy low, sell high, buy low, sell high, right? So let me mark that out again. Click the path button here, make it one of my favorites, as you can see it's up here. So I'm going to click the path, click on that, right? We're going to start from the bottom and work our way up. We're going to lock it up with this pencil lock. Start from the bottom and work our way up. We're going to make the path like this. We're going to go to every break of structure, BOS, that we've actually created on here. So that's the path, right? Because the market never goes in a straight line. It always has a point where it returns, which is called a retracement. Okay. And all the retracement, it pretty much picks up more orders to head higher. Because the pivot points and the retracement points It's this orders being, that hasn't been placed yet, and it went back to capture those orders. Okay. Delete that. Okay. So this is what we're looking at. This is on the 4 hour time frame, right? So basically, there's another thing here. Whenever you see like a retracement, you'll also notice that the retracement is filling the fair value gap. We're going to go over fair value gap in future trainings, but I wanted to show you what that looks like as well. As you can see, a fair value gap is a gap between three consecutive candles. So you have one, two, three, and the wicks did not touch each other. We consider that a fair value gap. Okay, so if I open this up, okay, and I pretty much show you that one, two, three candles, right? The middle candle, you have a wick here and a wick there. Those two wicks did not touch. So right between those two wicks, you're going to put a box. You're going to call that area your fair value gap area. Okay. So if we were to label this, put some text to it, label it FV fair value gap, FVG, capital FVG, fair value gap. Okay. We're going to put it on top, center, and that's where it is, fair value gap. Because the fair value gap, right? As you notice, the market always comes back inside of the fair value gap to fill the fair value gap before it trends higher. So if you know this, you can anticipate placing a trade, whether it's a limit order or market order, you can anticipate placing trades on the pullbacks. Okay. So that's really important. As you can see, there's another one right there. So if we make this bigger, okay, if we don't confuse you guys with all these lines, so we take some away. You know that's a trend line. We're trending higher. Okay. And you already know this is a path. I'm going to show you another fair value gap. Because when it retraced and came down this area right here, what did it do? It came back and tried to attempt to fill this fair value gap. So sometimes it will fill it, sometimes it won't. So if you had placed a limit order inside this fair value gap, you would have missed this trade. But if you were watching this trade, okay, and you notice that there's a candle, a green candle right here, which is a bullish engulfing candle, you could have still got into the trade, okay, right at the close of this candle, which is right here, and continue to ride that trend higher. Okay. Okay. But the trend, actually, the structure of this, the structure actually changed right here. Right? That's where the structure changed there. Okay. Now, is there a gap? When you see this pullback right here, is why you're training your eye. Is there a gap in this area? Yes, there is. This candle and this candle's wick did not meet. And what I'm doing, I'm just practicing with you to show you how to put these fair value gaps into play. As you can see, it came into this fair value gap more than once. Like right here, and then over here, right? Again, this is considered fair value gap, J. Okay, FJ. All right. So pull back, You would enter the trades in this fair value gap area to ride it higher. Okay. There's another fair value gap right here. Just look for those candles where there's a gap. And as you can see, it went into this gap. Okay. And there's another gap over here. So you just want to mark out your gaps because look, it always comes back and fills your gaps. So if you want to take a trade, in this area, you could, and then wait for it to go to the highest point. And there's more BOSs, right? So let's put a couple more. There's one right here. There's one right here. And it stopped right there. So there's a couple more over here. So that's what I wanted to share with you guys today. Pretty much what a BOS is. So you can, it's the same is true. The same is true if we look at a downtrend. Okay? Let's go over here. So a trend that trends lower. So I can show you how to mark the BOS. Let's do this. I'm going to clear everything and I'm going to work on this one right here. This is considered a downtrend. This is considered a downtrend as well. So let's look at that. So let me remove everything. We're going to start from this downtrend. Okay. And then this downtrend and mark our break of structures. Okay. So again, we take our trend line, we go from the top to the bottom, right there. And we can do the same over here. All right, we'll be working with those two. Okay, so it started here, went up, and then came down. Is there a break in structure? Breaking this structure here. Is there a BOS? Yes, there is. And it's red candle. This red candle broke the structure, so that's the BOS. Right? Okay. Then you go down to the next green candle, and you'll notice that there's a break of structure there as well. Right here, there's a break of structure. Okay, that's a break of structure, and that's a break of structure. But what happens in this break of structure? It didn't continue to go lower. It gave you a huge pullback right here. But I want you to take a look at this. One, two, three candles. There's a gap between these two right here. And what did the market do? It attempted to try to fill the gap, but fell short. But if you saw this and you saw a bearish engulfing candle, which is this candle bigger than the previous candle, you could have got into the trade at the close of this candle, set your stop loss above this area, and continue to ride the trend lower. Okay. All right. And here we see multiple change of character. Let's mark it. And there's one here, this red candle. Stretch it to the left. It's one. Oh, another one. Another one. Whenever there's a break in structure, mark it out. Okay. And then lastly, there's no more break of structure because as you can see, it did a change of character, okay, on the right side. So where would you enter these trades? You would enter these trades on the pullback. All right, so let's mark that out. Oh, this is getting a lot of value from this. This is some good stuff here. So I want to use, where is it? Let's use that. Okay, so you would change the character here. You would enter here on the pullback. Let's make that smaller. Okay, into the pullbacks. Okay, break the structure. They pulled back. You enter here. Okay. So yeah, because we use a checkered flag. We would enter here, right? So we enter here. You would enter here. You would enter here. You enter here. And let's pull back here. Enter over here. Okay, for opportunities to earn some profits. Those were the where the pullbacks are. Those where you would actually place your trade in order to continue to capture some downward momentum. Now, if you caught it way up here, of course, you only have one trade. But if you want to do multiple trades, you can. But always, always, always protect your principal and place a stop loss above your entries. That way, if the market, retraces like it is doing here, right, or pulls back, changes directions, okay, and stops you out, you're not going to blow your account. So we're going to make sure that we do that. All right, so that's what I wanted to share with you. So we went over some key concepts. Well, last week we went over market structure. Today we discuss break of structure, BOS. And then next week we'll discuss origins. We'll discuss, you know, supply and demand. And the week after that, we'll talk about liquidity. And the week after that, we'll talk about the imbalances. So, yeah, rewind the video, you know, replay what you just was taught and apply it, right? Apply it. And I'm going to give you one last bonus material before we leave. But I've noticed something in the market that I want you guys to mark out on your charts that it's going to blow you away. So let's take a look at this is the 4-hour chart again. Okay. Now I want you to go to every peak, right? Every top of a trend. And I want you to identify these two candles. So top of this area right here, what do you see? Is a shooting star with a bearish engulfing candle. Those two candles I want you to box out. like this. So whenever you come across these two candles together, I want you to box them. Okay. And then right after you do that, I want you to put a horizontal ray underneath the green candle. Okay. Because something special happens when you do that. I'm going to share with you exactly what I'm talking about. But let's go through some historical data. Okay. We can see one here, right? So we're going to do, we're going to box it. Then we're going to put a line underneath the green candle. Okay, we're going to continue to do that. I'm going to show you the surprise in a moment. Here's another one. I'm going to box these two candles. I'm going to put a line underneath it, the green candle. Okay. We're going to continue to back test this. Okay. That's a tweezer top, so that doesn't qualify, although it could. Right? Really? Yeah, let's do it on the tweezer top. Put it underneath the green candle, box it out. There's a reason why I'm sharing this with you because I had an epiphany when I uncovered it, and it's going to blow you away. So, all right, so those were the tops, right? Those were the tops. Let's see if we can find another one here. Top of this one. Let's make this bigger. And you could do this in any time frame. You could do this in the full hour time frame, the daily, the hourly, 15 minute, it doesn't matter, 5 minute. And again, we uncovered one here. We're going to box it up. This is what I want you to do in your back test. Box it up. And you're going to put what? A line on a green can. It's already. Okay. A couple more. So, do this one, but it really doesn't qualify because this green candle is bigger than the red candles. We're not going to do that one. Bypass that one. We're going to do that one. So here, so all you're doing is looking for this chart. So, take one more. Okay. See, it happens often, right? But based on time, when you find this being developed, now, why did we draw this line, this blue line? We drew this blue line as a reminder to ourselves that the market's going to come back and touch that blue line. Once it touches the blue line, most likely, okay, there's a 50-50 chance, right? Because we don't know if it's going to go higher or if it's going to go lower. But 50-50 chance it's going to bounce off this line and continue its journey downward. Okay, so if you miss entering the trade over here, you just wait for the market to come back and retest the blue line. All right, so let's move forward and let me show you what I'm talking about. All right, so we did a couple of them. So we're gonna go back here to the original. We did this one, right? Market came back, touched the line, okay, and we take our checkered flag, we would enter the market here, right? So we want to catch these pips going down. Try to catch these pips going down like so. Okay. So that's one. Let's look at the others. There's another one over here. Like I said, it's a 50-50 chance, right? It may sometimes work out, it may sometimes do not work out. This is a no trade because it went too far up, right? It went way past our blue line. So you wouldn't place a trade going down on this one. So this is a no trade. So do not place a trade on this one. That's a no trade. Let's move forward to the next one that we did. So there's another one. Got this one. Right, so we could have entered a trade going down this way, but if you missed a trade, right, you wait for the retest. And here it retests the area again. And you see another bearish engulfing candle. So if I were to take my checkered flag, I would have entered, right, and captured these pips going down. So here. Okay, so that would have been a good trade, right? We made some money on that trade. All right. Now, let's go to our next line. We did. It's right here. All right, so here's the other one. The tweezer top one, right? We've created a blue line. Now, keep in mind, this is a reversal setup. So you could have taken the trade at the end of this candle right here. So I should have took two flags. One right here. Captured these pips going down there. And then if you miss this setup, you wait for it, and what happens? It almost gets there, but it didn't. Okay, so you probably would have been able to enter a trade off of this line, but look what it did right here. Same exact setup, right? With a blue line, and you have a bearish engulfing candle, okay? And where would you enter? Let's take a checker flag and put it there, enter there, and capture these pips right here. Yeah. So it's these two. Hopefully you guys see the pattern. So make note of this pattern. When you see this pattern in the future, you make sure you truly understand what's going on. Like right here, blue line, right? It went a little bit past the blue line, but it did come back, right? It did come back. Okay, this is a 50-50 chance of taking this trade. You could have entered, okay, based on, let me get my chicken flag, like right here off of this candle, right there. A little hard to really recognize this, but as you can see, okay, it almost kinds of mimics over here, right? Because what do you have? If we were to mark this out with the bearish engulfing candle, and then put a blue line underneath a green candle, we could have possibly entered here and captured these pips right here. All right. So 50-50 chance there. Get here. So this over here. We did it over here, right? The blue line. Again, bearish engulfing candle. You could have entered the trade right here. Close of that candle. But if you miss this, right, you would have made a lot of pips on this one. And it continued right here. So if you put your stop loss above, wow, this would have been a great trade. You never would have hit your stop loss. It's putting down here. Because here we have the same pattern. Same pattern. Okay. All right. So that's what I wanted to share with you guys. This is really cool. I'm going to be looking out for these patterns as well going forward. So the minute the market forms these particular candles, make sure you put that blue line underneath the green candle. Okay. And then wait for a retest of the blue line, or take your trade at the close, okay, of the bearish engulfing candle. Okay. So if we were to unmask this, what this checkered flag is, okay, we have a bearish engulfing candle right here, right? You would place your trade at the checkered flag. So let's say right here, you place your stop loss above it all. Let's say right there. So you're going to take your short tool. This is only for down trades, by the way. Take a short tool, place it at the entry, place your stop loss right there, and you stretch this out to the next lower low on the left side. Let's say right here, right? Let's see, right here, right? And you would have got a ratio of 1 to 4. So if you would have got, had $100 order in for a sell, you would have made over $400. Could have hit you take profit when it came down here. Depending on your lot size, it would have been a 1 to 4. For the one you put in, you would earn 4. So this is a really good trade. So definitely, back test this. I mean, the chart is your friend. Look at historical data. This is doing technical analysis going forward, and see if you catch some trades based on a simple strategy. Okay, just look for the pattern, wait for the retest, enter at the close of the bearish engulfing candle, where this actual checker flag is. If you miss this entry, okay, wait for the retest towards that blue line that you set for yourself. Okay. All right. So that concludes my trading for this week. Come back next week, Saturday, and review another video off my channel. If you like what you saw, comment. Okay. Give me a thumbs up. And if you wish to donate or buy me a cup of coffee, there'll be a link on my website at metrofxtraders.com where you can donate and say, hey, buy yourself a cup of coffee. That was a great training. Learned a lot. I'm going to put it, to use. And I will definitely back test it. And, no amount is too small. So I'll let you, donate as much or as little as you like, but we'll definitely appreciate that. That way it gives me motivation to continue to do these videos for you guys. But come back next week and we'll discuss some more content. So share with your friends, like the video, and have a successful trading week next week. And definitely share it, share it, share it. Hopefully you got a lot of value. You took some copious notes. Go back and rewatch the video, and you'll definitely learn more by just rewatching it. So with that being said, thanks for watching, everybody. And I appreciate you all that are subscribers. If you're not a subscriber yet, subscribe. I thank you very much for doing so. And you have a wonderful day. Thanks for watching. Bye for now.